Happy Wednesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Asia, Europe, and North America. My name is Tony. Let's jump in. And first up, US President Donald Trump's apparent reversal on firing Federal Reserve Chair Jerome Powell brought brief relief to markets, but investors and analysts warn that the underlying instability caused by the administration's economic policy remains unresolved. On Tuesday, Trump stated that he had, quote, no intention, end quote, of firing Powell, despite previously floating the idea and publicly criticizing the Fed Chair for refusing to cut interest rates. This reversal followed a sell-off on Monday after Trump lashed out at Powell as Mr. Too Late on Truth Social, prompting concerns over a direct challenge to the Fed's independence. The S&P 500 fell 2.4% and the dollar dropped to a three-year low. Markets rebounded Tuesday afternoon, with the dollar index gaining 1.1% and the yen weakening to 142.95. Analysts credited figures like Treasury Secretary Scott Bessent with persuading Trump to back off, recognizing that firing Powell would have triggered a full-scale market crisis. Quote, this shows that there are some guardrails around the president, end quote, said Dick McClarkey of SLC Management. Despite Trump's walkback, the Fed remains in a difficult position. Powell has signaled the central bank will not lower rates until the inflationary risks of Trump's tariff strategy become clearer. Tariffs already dampened U.S. economic growth and increased input costs. Fed officials have little room to maneuver without appearing politically compromised. Adding to the pressure is the broader market reaction to Trump's trade reset. According to Alan Kobza of Societe Generale, global investors are beginning a sustained great rotation out of U.S. assets. Having once backed the strength of U.S. equities and the dollar, Kobza has reversed course, citing persistent policy uncertainty and overvaluation. Since his call in September of 2024, the S&P 500 has dropped 15% and the dollar index is down nearly 9%. For years, U.S. markets were seen as a haven in times of global risk. That is changing. Quote, the risk premium applied to all U.S. assets is on the rise, end quote. Kobza warned, adding, quote, it is the end of that exceptionalism, end quote. He believes the rotation towards European, Japanese and Chinese equity, now seen as better valued and less politically volatile, will continue. Further exacerbating investor anxiety, the International Monetary Fund, IMF, recently slashed its global growth forecast to 2.8% for the year, its weakest projection since the pandemic. The IMF cited Trump's tariff regime as a major threat to global stability, warning that an escalation could send the world economy into a deeper downturn. While Trump's disavowal of Powell's dismissal has averted an immediate crisis, long-term damage to the credibility of U.S. institutions may already be done. With the Fed's independence now under threat and investor confidence shaken, America's financial dominance could be at a turning point, though some commentators would argue that it's never a good idea to bet against the American economy. Nevertheless, the markets, like the global economy, currently still remain on edge. Next up, the United States and India have made, quote, significant progress, end quote, toward a new bilateral trade agreement following high-level discussions in New Delhi between U.S. Vice President J.D. Vance and Indian Prime Minister Modi. The talks, part of Vance's four-day visit to India, mark a key moment in the two countries' evolving economic partnership, as New Delhi seeks to avoid sweeping tariff hikes and secure greater trade certainty with its largest trading partner. The White House confirmed that both sides have finalized the terms of reference for a, quote, new and modern trade agreement, end quote, laying the groundwork for formal negotiations. The visit comes as India faces the threat of up to 26% tariffs on its exports to the United States, part of President Donald Trump's broader push for what he calls reciprocal trade measures. The proposed tariffs, currently on a 90-day pause, have added urgency to the talks. For Prime Minister Modi, reaching a preliminary deal before the fall deadline is critical. An early agreement could shield India's export-reliant industries from disruptions and enhance its attractiveness to foreign investors. Quote, India is better placed than its regional rivals in terms of progress toward a deal with the US, end quote, said Amitendo Palet, a trade economist at the National University of Singapore, adding, quote, the pace of negotiations suggests India has a solid chance of earning a reprieve, end quote. Beyond tariffs, the US is pushing to expand market access for American goods and services and dismantle what it sees as barriers to trade, especially in the digital economy. A major sticking point is India's e-commerce sector, where US giants Amazon and Walmart face strict operational constraints. The US Trade Representative has labeled India's rules, such as bans on inventory ownership and foreign direct investment restrictions, as non-tariff barriers. The Trump administration is also pressing for reforms that would level the playing field for US e-commerce platforms, particularly in relation to India's dominant domestic player, Reliance Rental. Owned by Asia's richest man, Mukesh Ambani, Reliance has benefited from regulatory advantages that US companies claim are unfair. Walmart, which owns Indian online retailer Flipkart, has joined Amazon in lobbying for expanded access. The debate has sparked concerns within India. Praveen Kandawal, head of the Confederation of All India Traders and a lawmaker from Modi's party, warned that foreign investment must not come, quote, at the cost of distorting India's retail ecosystem, end quote, or undermining its vast network of small traders. Despite these frictions, the Modi-Vance meeting was largely optimistic. According to an Indian government statement, both sides, quote, welcomed the significant progress in the negotiations, end quote, and reaffirmed their intent to deepen cooperation in energy, defense, and strategic technologies. The meeting concluded with a dinner attended by Vice President Vance's family, symbolizing the personal and diplomatic warmth underpinning the talks. Vance's partner, an American of South Asian heritage, likely also introduced a softening touch to the diplomacy. India's finance minister, speaking separately at Stanford University, emphasized India's proactive approach to engaging with the Trump administration. Quote, the United States is India's biggest and top-most trading partner, end quote, she said, stressing that New Delhi's focus is on ensuring long-term, mutually beneficial ties. With US President Donald Trump expected to visit India later this year, and both countries aiming to double bilateral trade to $500 billion, momentum appears to be building. Yet the success of the agreement will depend on reconciling differences over e-commerce, regulatory frameworks, and trade priorities, challenges that remain deeply political and economically significant. With this massive trade reset and the new Cold War with China, we are certainly living history. If you want to be on top of the most up-to-date and salient financial and economic developments as we move through this incredibly transformative period, consider subscribing to Market Update, hit the bell notification icon, and you will be. And if you're getting some value from today's episode of Market Update, don't forget to hit the like button. We now move to Europe. The IMF, International Monetary Fund, has lowered its 2025 growth forecast for the UK from 1.6% to 1.1%, citing the economic fallout from President Donald Trump's newly imposed tariffs. The move comes as global trade barriers rise and UK households face persistent cost pressures from high energy prices and borrowing costs. Despite a projected uptick in inflation from 2.5% in 2024 to 3.1% this year, the IMF sees this as a temporary effect, primarily driven by energy prices. It expects inflation to retreat to 2.2% by 2026, giving the Bank of England space to ease policy. The fund suggests the Bank of England could cut interest rates by a further 75 basis points this year, on top of its February cut, without jeopardizing monetary stability. Quote, the stance of monetary policy, even with the additional 3 cuts, remains restrictive, end quote, said the IMF chief economist. He expects the Bank of England's key rate to eventually stabilize to around 3%, down from the current 4.5%. The IMF's revised outlook aligns with the UK's Office for Budget Responsibility, which forecasts 1% growth for the year. The fund also trimmed its 2026 forecast to 1.4% from 1.5%, reflecting weaker private consumption, higher gilt yields, and the burden of Trump's tariffs, especially the 10% duty on UK imports and higher levies on cars and steel. Bank of England officials remain cautious. Deputy Governor Sarah Brendan recently warned that while tariffs will likely reduce growth, their inflationary impact remains uncertain. Meanwhile, Bank of England policymaker Megan Green said the tariffs pose a greater disinflationary risk. UK Chancellor Rachel Reeves is in Washington this week to push a pro-trade agenda at the IMF and World Bank meetings, seeking to mitigate the tariff fallout and advocate for global economic stability. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. I should anticipate some of the comments below. Yes, I've had a shave, and for those who do not like this look, not to worry. The thing about here is it grows back. Thank you for watching today's episode. Have a wonderful Wednesday, and I will see you for another episode tomorrow.